Welcome, guys. Welcome to another edition of Market Wraps. As usual, I have Pankaj sir with us. Pankaj sir is the head of research at ICICI Direct. Hello, sir. Good evening. How are you?
Hi, good evening, Gaurav.
Yes, sir. Great week. I think a volatile week, week full of action. I would say with regards to events, lots of results, budget, FOMC meeting. तो सर यूएस वालों को छोड़ देते हैं हम इंडिया पे फोकस करते हैं सो योर टेक ऑन द इंटरिम बजट दैट इज बजट वोट ऑन अकाउंट बजट बेसिकली व्हाट इज योर टेक ऑन दिस बजट राइट नाउ.
So overall, Gaurav, if you look at it was more of a non-event, but yet I would say this budget is quite good from the perspective that there were no populist measures there. I think one concern was that government might go on slow on capex, but capex to GDP ratio has been maintained. In fact, it's been up to 3.4%. So overall allocation for capex has been increased by 11%. That is in line with the overall growth taken for most of the parameters. And I think good part is that on the fiscal deficit side. So fiscal deficit side, what we have seen is that this year government is going to achieve their targets of 5.9. So they will hit 5.8. They have in fact bettered the expectation for FY25 with 5.1.
Yeah.
And what this simply means is that, and this is happening ahead of key events like India's inclusion in global bond indices. And on top of it, if your fiscal deficit is in shape, I think it's a good move, and which is why we have seen yields declining about 15 bips. And I think this is specifically positive for PSU banks because one thing one should notice is that even if we take, while we have a expectation of about 100 bips kind of a decline for the entire year in terms of yield, even a 50 bips kind of a decline in yields, we have seen 15 bips on Thursday. So that can lead to a profit impact on profit of 9 to 10 odd percent for some of the key banks like say State Bank of India or Indian Bank. So I think, and which is what the kind of move we have seen in most of the PSU banks. So I think one big beneficiary of this entire budget has been the PSUs. And obviously, I think since capex has been the central theme or the highlight of even for this interim budget, I think so the entire sectors which are going to sort of get benefited from overall capex, I think should find favor going forward. And which is why we are turning even more positive on the markets. That is what I would say.
So, sir, any sector specific that you see, capex side to infra side will definitely come in. PSU banks too, you have said these two sectors will be there. Any other sector apart from these are on your radar or look good from here?
No, from the budget perspective, I think PSU banks are definitely worth looking at because, like I said, even if we take about say 10% or 1% kind of a decline in yields, that could easily lead to say 15 to 20% kind of a jump in profits on FY25 basis. So that alone can sort of lift. So PSU banks are clearly sort of looking a lot more better. While it could have a rub-off effect on number of other sectors, but if I have to sort of pick one, then that has to be PSU banks. Because structurally also, if you look at most of the PSU banks, numbers have been okay. They are approaching towards 1% ROAs. Valuations are okay. So I think that is one space where things are looking a lot more exciting.
One good thing is that the correction that was supposed to happen in Bank Nifty, because given the HDFC results and everything, I think we are relatively light from our positions in terms of longs. So going ahead in this, at least from here, there won't be major correction expected because जो होना था वो हो चुका है 44,700, 44,500 levels. We have already seen that. So I think now we are ready for 47, maybe 49,000 level. Sir, one question I just wanted to ask you. There was because we have two picks released today. One is the Gladiator में State Bank, which you have anyway spoken about that PSU banks look good. So viewer State Bank target is 728 in a Gladiator pick, which is given. One more momentum pick that we saw was on Concor, and we saw an announcement regarding PM Gati Shakti Yojana, which was about the fleets and developing out proper ports and connecting them with the railways. Do you see Concor also being a beneficiary of the announcement that is made in the budget?
So I think specific to Concor, if you look at two, three things, one, I think it is a divestment candidate has been sort of pending for long. The other thing is that company has done significant amount of capex, the revenues of which they are yet to sort of reap. Then I think any allocation towards logistics side, whether we look at the Eastern Freight Corridor or the Western Freight Corridor, is definitely going to be positive for Concor because what would happen is that they will be able to carry a lot more freight and with a lower cost. So obviously it adds to their profitability. And I think other aspect is that EXIM volumes have been soft, and obviously there is an expectation that from lower levels things could sort of recover. So I think Concor should benefit from a combination of these factors, I would want to believe that it should do well. We've been liking this stock for quite some time, but I think divestment is something which is really not
Right.
happening. So we are still hoping that probably not in the interim budget, but I think once we have the final budget in July, things will move in a positive direction. But I think risk reward wise looks quite an attractive stock.
Yeah, possibly. I think the divestment announcement did not happen going into an election year, probably because of that, because that may also give a negative sentiment that the government is behind privatization and all those stuff. I think that is why I may have paused there. So, sir, this was about the interim budget. I think there was nothing here. We'll cover it in the final budget session that happens. Let's come to the index. Let's come to Nifty. Last time you had given 21,000 as a support, worked really well. Towards 22,000 we're expecting 22 21 8 840 850 ka high bana hai. So we were in that range that you had given. Now the budget is gone, the events are done. I think just one RBI policy is there next week. Apart from that, major events are done. So what is our target going into a pre-budget rally sort of situation coming up in next 2 or 3 months?
So I think one key takeaway from the budget is that there were no major populist measures. So that could have probably set the base for some kind of a correction in the market. But since that is not the case, our sense is that overall the case which is sort of getting built up is a pre-election rally. Historically, last 3 decades, we have seen that around before elections, usually the market bottoms out in the month of Feb and March with a correction of about 8 odd percent. This time, we have already seen a correction of 4.5%. And from those levels, we see a rally of about 14-15%. And our sense is that since budget did not sort of is not going to sort of cause any kind of a challenge for the markets because it's a very pro growth kind of a budget. So from that perspective, we sense our sense is that market should witness a pre-election rally, and that should take Nifty target to about 23,400 by June 2024. And I think even breadth-wise also things are looking good. Large caps are relatively looking attractive. And I think sectorally, our sense is that BFSI, pharma, oil and gas, PSUs, entire lot, be it banks, be it companies in the power side or in the oil and gas side, I think all of them should benefit. And support for Nifty ideally would be closer to about 20,800 kind of levels.
Okay, I think like 20,700 was a previous top, which Nifty took out and went to 22. I think 20,700, 2,500 to 2,800, I think that would be a perfect range. 300 point ka range le lete, sir. I think uska median would come to what? 650. So that would be a perfect zone, if I may say from my end. Okay, so sir, this was about the budget and the Nifty thing, but now we have seen a lot of results and auto volume numbers have started coming in. So this week we saw auto numbers coming in and passenger vehicles particularly were doing really well. So Maruti also had the result and Tata Motors result is on its way. So what is your take on this auto sector as a whole?
So I think auto numbers, monthly numbers, the PV segment did well. Tractor sort of continues to lag. So within PV, I think Tata Motors did a decent set of numbers, especially the EV sales for them witnessed a 40% jump month on month to closer to about 7,000 units. Clearly, the new launches are definitely finding favor. CV, I think overall as a segment continues to sort of witness softness. Even Mahindra and Mahindra did well on the SUV side, so there they witnessed a growth of 22% upwards. Tractor for them was soft. I think Bajaj Auto domestic sales have been quite decent, up about 30%. I think export, while it might be up on a YY basis, but month on month, it is yet to sort of recover, and largely because of the dollar issues, a shortage of dollar issues faced by key economies. So overall, auto numbers were good, but I think when I come to specific numbers for say Maruti, now, Maruti overall came up with a decent set of numbers. So overall top line growth was decent. Now, key highlight for Maruti is that this is one stock, big stock, which is trading at about 20 times forward multiples. So valuation comfort is definitely there in Maruti. Other aspect is that they are talking about launching their EV product this year. So I think somewhere down the line, the excitement will get built there. Otherwise, margin-wise, last quarter margins were a bit soft, but I think that is sort of one-off because of higher discounting what they've given. So margins should normalize closer to 12, 13 odd percent. And I think premiumization continues to remain a play. So I think Maruti, while the launch pipeline is not exciting, given the fact that they are doubling their capacity in the next 7, 8 odd years, available at 20 multiples, I think the stock is at a decent risk reward multiple.
Sir, any targets on Maruti, or you would want one more week to come back on this?
So we would still take some time to sort of come back, but I think one can be constructive on the Maruti at current levels.
So I think Tata Motor results also, I think एक 2-4 दिन का आपको और टाइम दे देते हैं बिकॉज आपका रिवाइज टारगेट बचा है. So 810 था 890. I think 10% already 10% up from your previous target. So that we'll take next Friday in our next wrap. So viewers, also one more thing, we won't be able to take questions today because Pankaj sir has a lot of interviews lined up because he has to give budget views. So आज we won't be able to take the questions. So sir, auto done, auto sales numbers done. Let's come to a big boy of Nifty, Bajaj Finance. Bajaj Finance had its result from top NBFC in India. So what is your take on this result?
So one is Bajaj Finance, number-wise, no major complaints. I mean, they did the AUM growth of 35%. The housing finance portfolio is also sort of doing well with AUM growth of 32%. I think the only challenge for them is that they have guided for a higher credit cost of 175 to 185 bips, so which is on a slightly higher side. And I think there has been a management change. So we've seen Rakesh Bhatt moving and Anup Shah sort of coming as a deputy MD. So slightly bit of a dampener. And I think see, when you are priced at 5 times book, then you can't leave anything of any margin for error. And I think so there are some margins for error in Bajaj Finance, which is where I think our sense is that this stock is unlikely to outperform the overall BFSI space.
All I can add one more thing from here is like I was hearing the management con call. So at least Rajiv Jain himself has said that I'll be actively involved in the roles in the but anybody who comes in, but he will be actively involved in the decision making and all those stuff. So that is one good news apart from the exit of another ED. I'm so sorry. Sir, next major result that we had was Larsen. And on the PSU side, we have Bank of Baroda. So since we're talking about NBFC, we'll go in this order of Bank of Baroda and then we move on to L&T.
So Bank of Baroda also should do well. One, because of number of perspective. One, it's available at one time book. I think this is one bank. The overall advance growth is quite healthy at closer to 14% odd. Deposit growth was slower, largely because they are shedding their high cost deposits. So it should not be taken as negative. And since they are shedding high cost deposits, so which is why their margins actually improved quarter on quarter by 4 bips. And they are sort of guiding for 3.15% kind of a margin for the rest of the year. So no major issues with Bank of Baroda. And like I said, with the budget likely to sort of push banks, especially PSU banks, the proposition becomes attractive for them. And Bob is not disappointing from that perspective. So I'll not be surprised if, say, besides SBI, Bob, or Bank of India, or other banks like Indian Bank continue to do well.
Absolutely. I think Bob and Canara Bank have really outperformed in past 2 years. If you see the price action there as well. SBI, we're not talking about it's a leader.
I forgot to add PNB. So PNB is another stock which is looking quite attractive. Yeah.
So do you see PNB coming to that level of 2018 where we saw it coming down from the news that it had, the fraud news that was out in 2018? Can we expect?
So I wouldn't say that those levels can come, but definitely it looks like in the recent past, this stock has been sort of outperforming rest of the PSU pack, and it can continue to do so.
Okay, sir, I'll come back to this next time. Okay, so sir, you are coming to your favorite area, capex पसंद है आपको, infra पसंद है, तो infra capex कुछ भी हो, cement की तो जरूरत पड़ने वाली है. And on Thursday during the budget day, I think Shree Cement results came on Wednesday, and we saw a very good positive reaction by Shree Cement. I think it was up 6% or something. So how does the number look? Is this do you see this stock outperforming? Because थोड़ा महंगा महंगा in terms of price है, valuation wise तो मैं comment नहीं करूंगा. So what is your take on Shree Cement's result?
So after a long period of time, I'm liking Shree Cement from a valuation perspective. I think this is now available at 15, 16 times EV by EBITDA on FY26. So definitely looks attractive, and our sense is that with the kind of numbers what they've delivered one of the highest EBITDA per ton, and overall expectation is that they are going to maintain some of these higher levels going forward as well. And on top of it, this is one company which is quite aggressive on the capacity expansion front. So they are already reaping the benefits in terms of volume growth being about 9 odd % quarter on quarter basis. They are looking to add about capacities of say from 56 million ton by FY24 they'll have, and they will be adding about going to 75 million tons. So fairly aggressive capacity expansion. So it's a company which is expanding at a pretty fast pace, has got one of the highest margins, and luckily the valuations are not looking demanding. So I think Shree Cement definitely is looking quite attractive.
Any targets here, sir? Or again, all the targets I'll ask you next week.
I'll come back.
Okay, sir, no problem. Sir, another cement company with another result, that is Ambuja Cement, recent takeover by Adani Group. What is your take on this company?
So the numbers were a bit soft because the company, some of the plants were under sort of maintenance. So that sort of led to some softness in numbers. But nothing takes away from the fact that this company is one of the most aggressive in terms of capacity addition. So their overall aim is to take their capacity from 78 million tons to about 110 million tons in the next 3-4 years. And so this is another company which is we have been liking, I think. But valuation wise, definitely it's trading at 17 times EV by EBITDA, so slightly more expensive compared to Shree. So between the two, obviously I'll prefer Shree given the fact that they are more capital efficient, plus valuation wise they are looking at it.
And what about the smaller players? So like you have mentioned about Sagar Cements and all those stocks. So do you see Shree Cement being the leader of the pack doing well? Can that have a rub-off effect in these companies as well?
Absolutely. I think so. Overall, cement as a pack is looking quite attractive because, see, till last year, all of them suffered largely because the power and fuel costs had sort of gone up. And depending on what kind of inventory they are sitting, players are reporting improvement in the margins. For Sagar Cement, the extent of improvement was yet not visible. Probably we might see over a few quarters down the line. But I think the trend is largely similar for most of the players. The capacity utilizations are good. There's been a bit of a price hike being taken in select markets. So that way, I think it's a very secular trend which we are seeing. And overall, our sense is that the tier 2 names ideally should do catch up in terms of valuation because there is a significant gap between, say, larger players and smaller players.
Absolutely. I think one more number would be expected. I think Ultratech numbers are yet to come, right? I'm not able to. Okay.
So it has already come. So.
Oh, sorry. Yeah, I was just confirming with you. Okay, Ultratech numbers are done. So moving on from cement, another two companies, Nifty 50 companies that have declared the result come from the pharma pack. That is Sun Pharma and Dr. Reddy's. Sun Pharma, I think, has been outperforming this, has outperformed this week. So we'll start with Sun Pharma. So what's your take here, sir?
So before Sun Pharma, I forgot to add my bit on L&T. So L&T, I think overall, see the good part for L&T is that they were guiding for earlier lower teen kind of order growth and something similar kind of a top line and bottom line growth. But order book growth is expected to be 20% because they've been sort of seeing a good amount of order inflows, both on the domestic as well as on the export front. So international front. So I think order book inflows are good. I think the only challenge with L&T has been that since they are still executing the previous legacy orders in the engineering and construction side, and that is where the margin profile is lower. And our sense is that post Q4 onwards, the margin profile should improve. Another aspect is that we are hopeful that some monetization should happen for the Hyderabad Metro because there even the land prices have gone up. So our sense is that L&T, despite the softness or the correction what we have seen on the election day, on the result day, overall the stock should do well because I think this is one of the best proxy plays for overall capex. And I think Q4 onwards, things will start improving for them. I think the only challenge has been the lower margins, which our senses should get addressed after Q4. So L&T looks good to us. Now coming to pharma, I think pharma, what is coming out clearly for most of the companies is that the US market has been sort of doing well. I think we had a lot more worries on the US market for a lot of companies in the past few quarters. I think that has been put to rest. Now, some of the companies like, say, DRL, Sun Pharma, so they have been sort of doing well largely because of their specialty portfolio sort of doing well, because that is one portfolio which is not witnessing the kind of price erosion what the generic has been witnessing in the US. And that has been the sort of the defining quarter for most of them, and that has been sort of leading to better margins. The domestic portfolio is also sort of doing okay for them. So from that perspective, both the companies are looking good. And the pipeline also is quite good for next 1 or 2 years in terms of launches on the complex generic side for both the companies, both Sun Pharma and DRL. So that way, I think pharma is one sector which is, I think, coming out of a long period of underperformance. And now I think is overall, if you look at every quarter by quarter, things are looking a lot more bright.
There are a lot of companies that are already scaling their highs. I think Cipla was one of the companies which moved up. Glenmark has performed. Oro Pharma is in 4 digits now. I think Dr. Reddy and Divis and Sun Pharma should also kick on from here. Hopefully, we get some good news. So I think, sir, I've covered almost everything, all the major events for this week. Anything that I have missed out, I'll ask you next week on Friday. Sir, as usual, our main what do you call? इसको क्या बोलते हैं? एक important segment हमारे market wrap का, that is our hidden gem. Which sector and which company is what looking good to you?
So we've been liking Exide Industries for quite some time. That was our conviction idea. I think post results, we still like the stock. We have upgraded the target price to 380. So it is still a sort of a buy, largely because I think we're liking both the battery stocks, be it Amaraja or be it Exide. One, I think overall the domestic OEM growth is okay. So that is where both replacement plus OEM growth, our sense is that we'll keep delivering double-digit kind of a growth. And why we've been liking this company is that, battery is a big component for any vehicle which is going to come up. Typically, it's 35 to 40% of the cost. So imagine if you're buying a car now, you're putting a lead acid battery, you're costing, say, 5,000, 6,000 rupees. But when you're sort of buying an EV car, the kind of content per value, which will substantially go up. And this company has been a leader in that space. They are sort of far ahead in terms of capex being done. So which is where we like this stock. And a couple of positives. One, I think the core business is valued at some 16, 17 multiples. They have got some 5,200 crore worth of the life insurance shares. And on top of it, our sense is that so we've taken a very nominal sales coming from the lithium-ion battery for FY26. So if they're able to better this, our sense is that the target prices for this stock is going to be even more higher. So we are quite conservative. So even conservatively, our sense is that the stock fetches an upside of to the target of 380.
Perfect. That's it, sir. That's it from my end. Thank you so much for taking time as usual. Thank you, viewers, for joining us. So this is it from our end. Thank you. See you guys next Friday.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.